What if I told you that profitable traders don't have a strategy? They don't backtest, they don't journal, they don't even meditate. All they have is a few simple key things that they look for, and they are more profitable than 99% of traders. So in this video, I'm going to explain why that is. Okay, so what do profitable traders actually do? And this is the most important part of the whole video. So what they do is they don't have a strategy, they have guidelines. And this is so important. What they do is they don't come on the charts and they don't say, oh, if I see a bearish market structure shift and I see a fair value gap, then I'm going to randomly sell, right? I'm going to randomly sell like this. This is not what they do, and then they aim for a 2-to-1. This is not what profitable traders do, right? They don't just randomly buy and sell based on entry patterns, based on two indicators that cross over. That is not what they do. They have logic and context behind their trades, and this is so important because right here we're on gold, and if we just zoom out, this has been in a bull market for almost years at this point, right? So if you're selling randomly because of some entry pattern, listen, you're basically gambling, right? You're not going to make money doing that. And what profitable traders do when they get on the charts is they look for the direction of the market, right? Now, there's a few ways that they determine it. For me, I'm just looking for the overall trend. So if you just zoom out on gold, super easy, we are bullish, right? So first thing that they're doing is they're looking for the bias, right? The direction. Whether they want to use liquidity, order blocks, fair value gap, doesn't really matter, but they're looking for a direction, right? That's the first thing that they're looking for. And then number two, the second thing they're looking for is their entry pattern. And this is where so many people go wrong, right? They're not just looking for a random fair value gap or a random order block or market structure shift or an indicator to buy and sell at. They're looking for very specific things, very specific guidelines that are there to protect them. So what does that actually look like? So for me, what I look for is liquidity. That's the first thing I look for. And then the second thing is a liquidity sweep, and then my entry. So I'll show you what that looks like on the 5-minute chart. Okay, so this is what I'm doing when I get on the charts. First thing I'm doing, I'm looking for my direction, right? So we know on gold, we're bullish. Then the second thing I'm looking for is I'm looking for liquidity. Now, this is where people go wrong. There's no, ABC formula of every time I see this is what liquidity looks like. This is where you have to use your intuition, right? Super important here. Profitable traders, they actually think about what they're doing, right? They don't just blindly take their entry pattern because they see it. You have to think about what price is doing, and you got to think about it, right? If your edge, right, if your trading plan can be coded by an algorithm, you don't have an edge, right? It's that simple, right? You do not have an edge because Goldman Sachs or some sort of hedge fund would have already taken your edge from you, right? So the only way retail traders can be profitable is by using our intuition, by using logic, and by looking at the charts and actually thinking. So for me, first thing I'm looking for is liquidity, right? I'm looking for where are stop loss orders, right? I know I'm bullish, and I'm looking for where are stop loss orders. And if you look around this general area here, where we've got a high here and a high here, there is liquidity around this level here, right? And you'll notice these aren't perfect highs, right? Because in trading, there is no perfection. Again, we have to just think, where would stop loss orders generally be? So for me, this is my liquidity, right? This is essentially my target. So liquidity is here, right? This is my target intraday on the 5-minute chart. So what I want to look for is I want to look for my entry pattern, and I want to ride price up towards this target here, right? And every day the target changes. Liquidity could be, at this high, it could be all the way up here. It changes every day, right? So you have to think, right? You have to think when you get on the charts. So for my entry pattern, this is really important. What I look for is a liquidity sweep, and all a liquidity sweep is, it's a stop run in the opposite direction. So let's imagine you're bullish. What I'm looking for is I'm looking for some fake move that takes out stop loss orders, moves up in the real direction, gives me an entry somewhere around here, and then I can ride price up. Right now, you'll notice this is subjective. What that means is this isn't, every time I see this, that means you enter, right? So if we look at the charts here, right, we look at the charts. This is the liquidity sweep, right? You see how price comes down, it takes out this low, moves off in the opposite direction, retraces, gives us our entry, and then price goes up. That right there is our entry. And people always ask me all the time, like, hey, Steve, how do you know it's a liquidity sweep, right? Is there some sort of formula? I don't have a formula of, whenever price, if it goes 25% below the wick, and then within the first 4 candles, if it shoots off, that's a liquidity sweep. There is no formula, no magic formula like that exists in trading, right? You actually have to, you got to use your, your intuition, your logic. You got to think about what price is actually doing. But for me, I know there's liquidity at this high, all the way up here. I know the overall trend. I know what I'm looking for, and this is what I enter on, right? I don't have some, fixed guideline of, I have to see this, I have to see it, because technically, right? Technically, if you study market structure, this is a bearish market structure shift, right? The moment this candle closes below this low, that showed market structure shift. Now, I don't just subscribe to that at all, right? I'm all focused on logic, what price is actually doing. So for me, once I've got my liquidity sweep here, let's just mark this out, right? Like this. I'm going to look for my entry. So this is our liquidity sweep. This is our fake move designed to take out stop loss orders. And every day, the liquidity sweep will be different, right? Really important that you understand that. It'll be a different, it'll be different candlesticks. It'll be a different sort of pattern that you see, right? Every day is different in trading. There's no day that's the exact same, right? So it's the same thing with liquidity, right? There's no day where you're going to have, perfect equal highs. You've always got to use your intuition and think, oh, okay, where would people realistically have their stop loss orders? And for me, it's pretty obvious around this level here, there will be people shorting at this high and this high here. So for my entry, what I look for is liquidity up here, liquidity sweep, and I look for the fair value gap, right? Like this. Now, for your entry, what you're going to do is as simple as this. You enter on the fair value gap, put your stop loss at this low, and then you target either your 2 risk to reward, like this. This is the amount. So here's the liquidity. You can target 2 to 1, you can target liquidity, or you can target a 3 to 1, right? Like this. And you hold on for a bit, and then you take profit, gets hit. Nice and simple. And you'll notice only right at the end of, I guess of the trading strategy, do I have a simple ABC sort of thing, right? The only thing that I'm looking for at the end is a fair value gap. But you'll notice, completely useless, this bullish fair value gap is completely useless if there's no liquidity sweep, if there's no liquidity, if there's no higher time frame narrative of, price being bullish. It's completely useless without it, right? So if you want to be a profitable trader, you have to avoid these mechanical setups where it's like, oh, if I see, these 2 indicators cross over and the market shift at a key time of day, then and only then am I going to look to sell, right? You do not want to do that, right? Because you're going to get into so many bad trades, so many unnecessarily bad trades when it's so obvious and easy to understand what price is doing, right? Gold has been in a bull market for all of 2024 and 2025, right, so far. And there are people who have gone short in gold and have lost so much money. Why? Why would you put yourself through that, right? It's harder, don't get me wrong, it's harder. You're going to have to use some intuition. You're going to have to study more to be able to predict where price is going to go. But once you got it, this is how you actually make a shit ton of money from trading, right? And the reality is, mechanical traders don't make money. They don't make money because their edge can be coded by an algorithm. And if you want to be a mechanical trader, you're much better off just making a trading bot that does it all for you, right? There's no point putting yourself through the stress of having, a 30% win rate and a free risk to reward ratio, and, losing 7 trades out of 10 trades. There's no point doing that. You may as well just have an algorithm that does it. But if you want to be a discretionary trader, if you want to actually trade your own capital, this is the way to go, right? You've got to get on the chart. You've got to think, okay, where's price likely to go? What's price actually doing? How can I get into this position in the safest way possible? And how can I maximize my profits in the least amount of time? Now, these guidelines right here can make you a profitable trader. In fact, they will make you a profitable trader if you study them in depth, right? So if you have liquidity as your target, liquidity sweep to give you a safe entry, and just a fair value gap as your entry pattern, that alone will make you a profitable trader. So make sure you watch this full 2-hour trading course where I explain all of this in way more depth.